Well, tax tips from CBS 6, that's what we've got for you tonight. The deadline to file just around the corner, coming up, of course, April 15th. And tonight, CBS 6 is helping you through the process with another live Answers Team phone bank until 7 o'clock. Our tax experts are in the newsroom right now answering your questions. And Jennifer Lukey, she's up there as well. And she's with us right now to tell us about some of the changes you will need to know about for this year. Jen?
Well, Dory, the phones were already ringing off the hook up here. A lot of people with a lot of questions, so we want to get right to it. We're going to bring in Kelly Saposnick here. And Kelly, let's talk about a few of the things that are new. Particularly, let's start with the higher income folks this year.
Okay, Jen. Higher income taxpayers are getting hit with a couple of new taxes this year. The first thing is the Medicare surcharge tax, and anybody who's making over $250,000 and filing a joint return is going to have to spend an extra 3.8% in Medicare taxes this year on unearned income. Okay. So that's interest, dividends, rental income if they're not a real estate professional. In addition to that, the highest tax rate of 39.6 is back, and interest and dividends and capital gains used to be taxed at 15%, and now if you're over the threshold, you're going to be taxed at 20% this year. So it's a lot of changes for the higher income taxpayers.
And we also have changes with same-sex couples.
Right. This one is very difficult. The same-sex couples, if they were married in a state that recognizes same-sex marriages, they have to file married filing joint for the state as well as married filing joint for the federal. However, if since they were married, they have now moved to a state that doesn't recognize same-sex couples, they have to file a single tax return. Okay. So it gets very complicated. They have to file jointly for the federal and single for the state.
And for those folks quickly who work at home.
For those who work at home, because everybody works at home now, they can have a simplified office deduction if they're using a space exclusively for their home office of $1,500. It's $5 per 300 square feet, but the space has to be exclusive.
And lastly, a lot of folks itemize. There's some phase outs with that this year, right?
There is. If you're over, I think it's $450,000, you're going to get your itemized deductions phase out, which means you're not going to be able to take all of your interest and all of your tax deductions.
Okay, a lot of information there, but Kelly's going to sit down and take some calls. We've got all these call takers for you. If you heard anything there that caught your interest and you need a little bit more information, feel free to call in. The lines are very busy, so we ask for your patience. We'll be here until 7 o'clock. Back to you guys in the studio.